Welcome back to Making Money Matter, ladies and gentlemen. I am recording this on Australia Day, and I am, as most of you know, a proud Australian. And for those of you out there that say we should change the date of Australia Day, it's Australia Day today, and I am a proud Aussie. That's why, Rick, I'm wearing I couldn't find a green jacket, but I've got the gold shirt, proudly Australian. I really appreciate having you on board. Rick Rule is my guest today, ladies and gentlemen. He is the founder of Rule Investment Media. He's also the founder of Battle Bank. You can see from his shirt there. We'll talk about that as well. He's an investor, speculator, but also he's a contrarian. I've spoken to Rick. I've known Rick for many, many, many years. One year, I actually made him walk through a clown's mouth to come and talk to us back in 2011 in Sydney at our Australian Gold Conference. And last year, he spoke to us via Zoom at the Gold Conference. But he is a man that is a contrarian. We are going to talk about his uranium call. He called it, ladies and gentlemen, when all of you were looking the other way, and it was about $20 a pound. And now we're going to talk about whether he's still in uranium or whether he prefers other commodities. Rick Rule, great to see you.
Gary, thank you. I didn't realize today was Australia Day. I realize now I'm standing between you and a beer, which is probably a dangerous place, but I'll take my chance. Beer.
And I'm on a bit of a health kick, like Tony Licantro said he hasn't drunk for a whole year. I'm not going to do that, but I'm being very circumspect. Let's put it that way. I'm on a health kick.
You'll lose your passport, Gary.
True. I have to come to your conference in Boca Raton. Oh, actually, that's another thing, ladies and gentlemen, I want to talk to you about. You're running the Rule Investment Media Conference in Boca Raton, Florida. Give us the dates and tell us what, because lots of Aussies there this year.
I'm embarrassed to say I don't know the date, but it's sometime in mid-July, have a quick look, which I'll forward to you.
Okay.
Yeah, I mean, we had a reasonable group of Australians last year, yourself included. Mm-hmm. We thus far have 5 or 6 Australian issuers signed up. We hope to have more when the conference comes.
Okay.
Your delegates who aren't familiar with the conference should know it's probably in its 30th year, if not its 29th year. So it stood the test of time. The highlights are we have wonderful big picture speakers, people who talk to you about the world in ways, let's just say, that you wouldn't hear on ABC. The Jim Rickards and Bill Bonners of the world.
Yeah.
Once we have assisted you with a different worldview than you would get from popular media, we have some of the best analysts and portfolio managers literally in the world to talk about how to implement the strategies around that worldview. Importantly, too, we have exhibitors that are handpicked. At most conferences, the qualification to be an exhibitor is a pulse and a check that cashes in reverse order of importance. At our conference, you have to be owned in my own account or in accounts I manage. That doesn't mean, sadly, Carrie, that every stock I buy goes up. What it does mean is that I have reviewed the companies well enough that I'm willing to own them.
Yeah.
The attendees have told us for 30 years that the exhibitors are content too, and we believe them. On top of that, you will be in the company of several hundred like-minded, high net worth, hardworking investors.
Yeah.
Doing something like following Robert Friedland through the exhibit hall and seeing what companies he talks to, I would suggest is worth the cost of admission. And by the way, with regards to the cost of admission, if you aren't 100% satisfied that you got your money's worth, I'll give you your money back. Now, you can attend in person, which I would suggest you do, or you can attend without ever leaving Australia. We have an online video live stream event that 80 Australians attended last year. You can attend it from the comfort of your own home, although you miss things like cruising the Intercoastal Canal on a boat with me in the evening.
Absolutely, that was fantastic.
Putting all your liquor on my tab.
Aussies love that. We love that, Rick. But I'm going to say this to you because you mentioned that you can watch it online. Having been there for the past couple of years, in fact, for the past few years, it is very different to be there in person, ladies and gentlemen. And I'm on a mission to get a lot of Australians to come to Boca Raton. We've got to fly the big Aussie flag out there. And you've got some really good companies. You've got Meteoric, who were there last year. You've got Sovereign. You've got Deep Yellow and Boss, both uranium companies. You've got Hot Chili over there in the copper belt. And you've got Centaurus. And there are others, ladies and gentlemen. So, it's not just US companies, but I think it's really important because, as Rick said, and I don't want to go on too much about it, Rick, but I do want to just emphasize I'm going to be hounding you lot out there because I want you all to come across to, I think it's, we'll get the dates, we'll put them down below. But it's
and once again, unlike any other retail investment conference I know, absolute gold-plated money-back guarantee. If for any reason you don't think you got your money's worth, tell me, and I'll give you your money back. I would appreciate it, although it's not incumbent on you. If I've failed you somehow, tell me how. But there's no requirement. If you come to the conference, either virtually or in person, we would prefer in person, of course. And for any reason you don't think that you got your money's worth, your money will be 100% refunded. I need to say, Carrie, I've been doing that now for 30 years. And we've done a good enough job with content over 30 years that we've refunded about 1/10%.
Oh, wow.
Of our conference attendance revenue. So,
all right. Well, they know about it now. I'll put the dates down below. Battle Bank, just very quickly before I get into stocks, and one of the things I wanted to ask you was literally right now we're talking about exploration. It's out of favor. It's been brutal. But before we do that, Battle Bank, tell me quickly about Battle Bank.
Well, Battle Bank, for those of your viewers who haven't heard me talk about it before, is a U.S. bank and organization. The story starts really a long time ago in 1998 when a group of us met on my living room floor in Carlsbad, California, and started one of the first internet-only banks in the world. That was called EverBank. It was unique. Our branch was your computer or your phone. And we built that bank over 14 years from a zero asset base to $28 billion asset base, and we sold it to Teachers Investment and Annuity. The people who bought it really for the platform. They had 1.5 million members to their investment and annuity products business. And the bank morphed from serving the rather unique needs of my contrarian gold bug community to a community that was comprised largely of retired teachers. The 275,000 customers that we introduced to the bank over 14 years were left metaphorically homeless. And many of them began to contact us over the last 5 years. And finally, by the way, I wouldn't recommend this for people who are looking for a quiet retirement. We all from EverBank decided to come out of retirement, the same management team, and form Battle Bank. The unique propositions are this: no branches. We will have one savings product, which is a high yield money market account where people can earn interest on their checking account balances. No tricky deposit products that pay you no interest.
Okay.
We will offer certificates of deposit in 22 currencies, including the Australian dollar. So in particular, for business people that have a business, say, in Australia and a business in US, and they need to transact in both currencies, they can maintain a bank account in both currencies, and they can do currency transactions between those currencies for a quarter of the going bank rate.
Oh, wow. That's good. Yeah. We Aussies love to travel.
Yeah, we did that last time. We ended up having about $8 billion in foreign currency CDs, certificates of deposit in that bank.
Yep.
The thing that's new with Battle Bank that I'm particularly excited about is, and Australians might not believe this, maybe that's true in Australia, but no chartered bank in the U.S. offers gold loans. In the U.S., we've identified about $33 billion in gold and silver held in segregated accounts at Brinks, Loomis, and Viamat. Yep. Nobody lends against it. Let's say that you have $1 million worth of gold. You have a lot of gold, but you're short of cash right now. You want to put a down payment on a rental property. You don't want to sell your gold.
Yeah.
We will, in effect, have a margin loan on your gold. This is a unique product, and unique enough, this product and our savings products, that now nearly 12,000 people have identified themselves to Battle Bank as wanting to do business with us, either as depositors or borrowers or both. So I'm expecting when we open the doors that we're going to open them with a bang, We opened Everbank with no customer backlog. We're opening Battle Bank with 12,000 customers backlog. So I'm pretty
Wow.
excited about where we are.
So the big question is when are you going to open?
We believe we'll have a soft open, which is to say where they try their products
Yeah.
with my money and the employees' money in late April. And we're hoping to be able to open to the public in June, which probably means July.
Yeah.
We've been about 20 months in the permitting process. We had permits from the OCC and the Federal Reserve quite quickly. The FDIC has been a little more problematic. Now, in fairness, Carrie, if you followed American banking, my bank application was not the biggest problem that was in front of the FDIC. They
True.
had little matters like First Republic Bank and Silicon Valley Bank and the various bank failures. And while their apologies weren't earnest apologies, I can understand from their point of view
Yeah.
that
Just one or two little
managing a
things
failed
going
bank
on.
is probably more important than chartering a new bank. At any rate, they've given us now conditional approval. We have some deficiencies in the approval that they'd like us to address. We're addressing them. And the normal guideline is about 6 months from this conditional approval letter.
Okay. Just if we could go back for a moment, you said there's $33 billion in gold and silver sitting in various vaults around the US. Just let me get this very clear. And this is just a hypothetical. I have 5 kilos of gold sitting in a vault somewhere in Australia.
Yes.
How does it work?
If that gold is in a vault that is in a public company, which is to say where I can see an audit of the solvency of the vault, primarily Loomis, Brinks, Viamat, somebody like that, we will take the value of that gold on the agreement day, and we'll make a loan to you. You won't even have to take the money if you want. We can establish a line of credit for you so that you have access to the cash, but don't have to borrow the cash and don't have to pay interest until you need it. The gold stays in your account, but we have a charge over it, a filing over it. So if you neglect to pay us, we have control of that collateral and can sell it, pay down the loan, and then pay you out the balance.
Yeah.
This is the best collateral I've ever loaned against. It is physical possession of collateral that I can sell in 10 seconds if you don't pay me back.
Yeah.
For you, it allows you financial flexibility while still owning your gold or silver. If you want to buy a house with it, if you want to buy more gold and silver with it, whatever you want to do.
Interesting.
And it's a product that has the bullion dealers excited. It has the gold industry excited. And it has literally thousands of gold investors who have already expressed excitement about the product. I'm, of course, excited about it.
I'm getting excited about it too. Where can people find more about it? But is it battlebank.com?
Yeah, go to battlebank.com or go to ruralinvestmentmedia.com. We'll talk later about the rankings. In the question and comments section, simply write bank, and I'll send you some information about Battle Bank.
All right. We'll come to that at the end of it. Thank you for that. In the interest of time, I want to get on to Rick and your investing versus speculating versus contrarian. I know, and you know, that right now there's a couple of things. Exploration is out of favor. People don't care. Small caps are no caps. Yep. It almost feels like total capitulation, and the executives I speak to are just like, what do we do? What do we do?
Well, if they're high quality guys with high quality companies, the first thing they should do is call Rick Rule. I got the checkbook out.
Interesting. Okay.
In speculative parlance, no other way to say it. I'm horny.
Okay.
Last 12 years, I thought the risk to reward juxtaposition favored bigger companies. The bigger companies were cheap enough.
Yep.
When I went to do a private placement for the last 10 or 12 years, the terms in the private placement didn't reflect the risk to investors. The fact that the executives can't raise money elsewhere means that after 12 years, they're finally consigned to giving me fair terms. I was always here willing to write checks, but the executives were proposing terms that were, from my point of view, unrealistically negative to me. Okay. That's all changed. Now, it's important to note, Carrie, and you and I have talked about this before, if you look at the whole universe of juniors, Most of them you write a check to at any price level. Probably 85% of them are non-viable. What's beautiful about this market is that this market hates the juniors so much that the high quality people are priced like low quality people.
Right.
And there is a huge difference between the high quality people and the low quality people. The sector as a whole is a disaster. And the performance of those few high quality people is so extraordinary that it adds legitimacy and sometimes luster to to a fundamentally bankrupt sector. Buying the best people in an activity when traditionally those people generate over time spectacular returns. Being able to buy those people at a discount is, from my point of view, an absolutely spectacular advantage. So I'm here to take advantage of it. If you were to walk around your conference or any other conference in Australia, a conference I was just at in North America, nobody wants to know about the penny dreadfuls. Nobody wants to know about them.
Yep.
When nobody wants something, reminds me of uranium 2 or 3 years ago. When nobody wants something, you ought to pay attention. It means there's no competition. I joke, Carrie, an old, fat, bald guy like me can win the 100-meter dash if I'm the only guy that shows up to run. And right now, writing checks for juniors, I'm the only guy that shows up to run.
Wow. Now, when you say writing checks for juniors, there's lots of different commodities. And right now, for example, nickel's a bit on the nose. Lithium's on the nose, definitely. You don't write checks across the board. Is there something that you favor?
Sure, I do. I'm attracted to a tier 1 deposit. I define tier 1 as 10 billion US dollars in situ recoverable reserves and resources. Best quartile AISC in its commodity category. Best quartile ROIC, but at least north of 25%. I'd buy a sand and gravel deposit for that. I don't care about the commodity. It is unlikely that the price to value ratio in a commodity which is currently attractive would work for me because I'd have too many competitors.
Right.
But it's interesting that you mentioned nickel. The nickel space is going to be a very good place to be in a year and a half. The price is depressed for 2 reasons.
Okay.
Well, 3 reasons. One was very high expectations 3 years ago. Nickel was going to supplant everything else in batteries, so the world went crazy for nickel. But there were a lot of lateritic nickels, particularly in the Philippines and in Sulawesi in Indonesia.
Yes,
and there's
exactly.
a lot of lateritic nickels on the market. This increase in production will not continue and may decrease. I just flew over southern Sulawesi myself. Look down at the nickel fields there and the environmental devastation. And don't confuse me with a bleeding heart, but the environmental devastation was absolutely unbelievable. It cannot continue. It will not continue. Indonesian people will start shooting government officials if the degradation of Sulawesi continues at the level that it's occurring today.
Wow.
It is disgraceful. The second reason why I think the nickel price will rebound is that we're going through 1990 revisited, which is to say the Russians need money. And the Russians are selling everything they have in the cupboard that they can raise cash with. The biggest nickel producer in the world outside of Indonesia is, of course, Russia, Norilsk. You may remember, or you may not remember, 1990, the last time the Russians were broke. They, by themselves, crushed the nickel price, the platinum price, and the palladium price, and the diamond price as well, by dishoarding. Fast forward, it seems the Russians need money. They are wholesaling nickel, platinum, and palladium. Look at the charts. At some point in time, in 1990, it took about 20 months, the Russian cupboards will be empty. They'll be wanting to sell, but they'll have nothing left to sell. The selling pressure will abate and the price will rebound. So I'm very attracted to the nickel sulfides. You look at the various operations being shut down in Australia, what you're seeing there is supply destruction. And you're seeing supply destruction in the face of a circumstance where the new supply additions will not keep pace.
Okay.
They won't keep pace. I think, too, I don't know this to be the case because I can't get information out of Russia anymore. But I suspect that the big nickel producer in Russia, Norilsk, is not able to make the sustaining capital investments necessary to maintain production at prior levels
Wow.
simply because the Kremlin needs money from any source possible. Mr. Putin has a choice between money for bullets and bread or sustaining capital investments. What do you think a politician like Putin would choose? I don't know, but I have a suspicion. So I'm not right now, but I'm very bullish in the 2 to 3 year time frame about all of nickel, which folks are beginning to hate, platinum, which they already hate, and palladium, which they're learning to hate.
Why platinum? Why are they hating platinum and palladium at the moment?
Because the prices have fallen so dramatically.
Okay.
The top line narrative, what you would hear from President Biden or that noted energy physicist Greta Thunberg is that the internal combustion engine will go the way of the dodo in 5 years.
Oh, right.
So we won't need platinum. We won't need catalytic converters for cars. That's ridiculous.
Totally ridiculous.
Peak oil demand is probably 2065, 2070. If you believe that the average Zambian is going to be driving a Lexus to a non-existent charging station, okay, I just feel differently. I think the problem with regards to platinum and palladium is almost entirely Russian dishoarding. And I've seen this movie before. I went through it in 1990 and 91. And it was an extremely pleasant experience for me coming out the backside. Not as pleasant as uranium has been, but in truth, it was a very, very, very pleasant experience. Carrie, I've been saying in these interviews to your audience for 10 years, the cure for low prices is low prices. Low prices reduce supply, witness the shutdown of nickel operations in Australia, while they increase demand. If there's more utility offered by a commodity, the fabricators don't conserve it, they find a way to use more. Rising demand, falling supply, guess what that does to prices over time?
Straight up.
Conversely, very high prices, which paradoxically attract investors, reduce demand and increase supply, also self-correcting. The cure for low prices is low prices. The cure for high prices is high prices.
And most speculators wait for the high price before they jump in.
Yeah, you're either a contrarian or a victim. And sadly, 80% of people out there are victims.
Right. All right.
I say sadly. I mean, frankly, I have to have somebody sell my uranium stocks too. So.
And on that very subject, because that was a really good overview on the nickel and the platinum and palladium, but on that subject of uranium, is Rick Rule still very confident on uranium, or are you saying, no, I've had a great time? Because I noted earlier, I did say that both Deep Yellow and Boss Energy will be at your conference. So that sounds to me like you're still in favor of uranium.
Nobody can come to my conference that isn't owned in my accounts. And I own both of those names. But Carrie, and this might sound subtle, in uranium, the easy money has been made.
Okay.
I think the big money may be ahead. It would take me probably 20 minutes to explain that thesis, which I'm happy to do at any point in time. Suffice it to say, in the juniors, when a commodity moves from hated to tolerated to loved, that's the easy money. And a package of uranium juniors is, on average, up threefold.
Yes.
What I have done is I have sold enough of my junior uranium portfolio that I have the rest of the portfolio for free. I call that the point of no concern. I've dragged my capital out. I've sold enough to pay the capital gains tax. And frankly, I sold a little bit more so that I would have a cash reward for being early and brave. I'm holding the rest because I think because of structural changes in the uranium market, particularly around the term market, that the cost of capital for uranium developers will be much lower than the rest of the market thinks. That's a thesis that would take me 20 or 30 minutes to develop, and I'm happy to take you through it sometime. Today is not the day, of course.
No, let's get you back and let's talk about that on a separate one, but yes.
Great. So, for those few people who followed me into the uranium space in the juniors 2 years ago, I would advocate taking some money off the table, despite the fact that I think 2 years from now, the price will be higher than it is today.
Why? Why, Rick?
Emph
Why?
well, emphasize that I say think. What is certain is that I can take my capital off the table now and still have 2/3 of my position. I can have a riskless return. I think the price will be higher because the volumes in the uranium market are shifting from the spot market, where there's no price certainty, to the term market, where there's incredible price certainty. It is possible now for uranium producers, and to a lesser degree, uranium developers, to enter into what are in effect forward sales contracts, term contracts. In the uranium business, it is possible to lock in reference prices for as long as 15 years. There is no other commodity on the planet where you can get top line sales price certainty for 15 years, but you can in uranium. If your term contract is with an investment grade buyer, say Ontario Hydro, say Duke Power, say the Southern Company, say Tokyo Electric Power, say China General Nuclear, you can literally take that contract to the bank, Carrie. So while a gold producer goes to a bank and he or she has no real idea what they're going to sell their gold for 5 years from now, I mean, they can talk to the bank about negative real interest rates and quantitative easing.
Yeah.
And the bank says, yeah. Narrative is not collateral, okay? If you take a purchase contract from Tokyo Electric Power and the Southern Company to the bank, a contractual obligation governed by international law with an investment grade credit, the bank says, oh, wait a minute, I'm liking this.
Okay.
Carrie, I'm a lender, as you know, and it makes me smile. So I think what you're going to see is that you are going to see a lot of industry pricing firm for as much as a decade. And that will increase management's understanding of what their free cash flow is like, but it will also be much more visible to analysts and capital providers. And so I think that the cost of capital for the uranium industry is going to go much lower than people suppose. And I think that the valuations on forward sales are going to be higher simply because the analysts are going to be able to model them with much more certainty than if the sales were taking place at the spot market. Adding icing onto the cake, there are now 58 nuclear power plants under construction worldwide. If you are building a new nuclear power plant, I realize in Australia you guys are too pristine to have them.
Oh,
But if you
stop.
do it,
Yeah.
if you do it in some sober part of the world, China or the United Arab Emirates, typically you borrow about 2/3 of the cost of the plant. So let's say you're building an $8 billion plant and you've got to borrow $6 billion. Increasingly, the lenders are requiring you to have enough uranium contracted for long enough that you amortize at least 60 or 70% of the loan with uranium that you have already secured. So the market for term contracts as we build more plants is the firmest it has ever been. These are important changes, and I bet you no more than 1,000 people have paid attention to this.
Wow.
The structure of the uranium market is night and day different than it was 5 years ago. The spot market, which is the reference market, is increasingly irrelevant. In truth, the Sprott physical uranium trades more volume than the spot market.
More volume. Okay.
Yeah, there is an argument that the Sprott market is better than the spot market.
Wow.
The spot market has become a floating abstraction because the pricing is taking place in the term market. So the market is using spot as a reference, but the structure of the market is very, very different. Where you're seeing $106 US spot, you are seeing much more frequently $75 term with an escalator. But $75 locked in for 15 years as a floor price with a reference escalator is, particularly compared to 3 or 4 years ago when the number was 20, a spectacular number for these companies.
Would Rick rule, and by the way, ladies and gentlemen, this is not financial advice. So, Rick and I are having a conversation. Go and get your own financial advice. We're having a bit of a yarn, but we don't know your own personal circumstances. So please, please, please don't take what we're saying as gospel. But what I did want to ask you, Rick, was ETFs, exchange traded funds for uranium. Is that something? Is that the lazy man's way into the market?
Carrie, if you would have asked me 5 years ago, I would have said, don't do ETFs. There's something inelegant about an exchange traded fund that has 40 companies in it, 20 of which you wouldn't otherwise buy with a straight face, particularly when you pay a small fee,
Yeah,
to assemble a portfolio where you wouldn't buy most of the shares.
right.
What I've learned in the past 5 years of grading 80,000 portfolios is that most investors don't do the work to ascertain between the good companies and the bad companies, so
Correct.
they own the bad companies anyway. I've come to believe that somebody who is going to be a small passive investor in a beta-oriented trade like uranium is better off owning the ETF than nothing.
Yeah,
Because they don't do the work to do the proper stock selection, at least it gets them in the trade. And it leaves them the time which they would otherwise spend investigating uranium companies to read books, play with grandchildren, drink beer, work, make money, do all those other things you might want to do with your time. So I've completely turned around on ETFs.
okay.
I thought they were very inelegant instruments 5 years ago, but then I'm the kind of guy who works 60 hours a week in retirement, and I've learned that most of the population
Don't.
is more sensible than I.
Well, I don't know about that. I'm like you. I love learning and not being lazy about it. But I'm still learning because I'm not like I don't have a background of full understanding of it, which is why I love having these conversations. But um, I think it's interesting what you say about ETFs. And for those people that don't want to put in the 60, 70 hours a week, it's an option. It's an
By the
option.
way, I happen to believe, just from a commercial point of view, that the finest of the ETFs, of course, is the Sprott
Of
ETF.
course. Of course. There is a Sprott ETF, ladies and gentlemen. Do your own research, do your own homework. But
Right.
there is one of those as well. Rick, you and I have spoken before, and I mentioned earlier that you came out and walked through a clown's mouth many years ago in Australia. Remiss of us not to talk about the gold market, the gold and the silver, the precious metals market, if you like. What is your views?
Well, it's interesting, Carrie. That time I came out and spoke for you was another time when the juniors were decidedly out of favor.
Yeah,
You may remember that I came to that conference extremely sick. I could barely
that's
walk
right.
through that clown's mouth and barely walk back. The thing that made me do it was that the Aussie juniors were so cheap that I felt if I didn't do it, I was missing a wonderful chance to burnish my reputation in Australia. And I was able to do that. The stocks rebounded very nicely. And I see the same circumstance in front of us now. I see these juniors really, really, really being unloved.
Yeah.
And I see, particularly if you see a Fed pivot in the United States, particularly if the Fed lowers the so-called stipulated interest rate in the United States, if they say that inflation isn't their key worry, if that happens, I think this is going to be a rock and roll year for gold.
But do you
I
think they're going to do you think they're going to I mean, look, lots of chit
Yeah,
chat about they're going to lower interest rates, but I don't know about you. I've got a feeling that they're going to talk about it, but are they actually going to take any action? Interesting.
that's what I think they're going to do, Carrie. I know that the Fed regards themselves as the last bastion of defense against inflation.
Mhm.
The idea that Congress might exert some discipline, or that either Trump or Biden might exert some discipline, is fine fiction. We're regulated by the Fed, so we talk to lower level Fed people all the time. And I think their preference would be to talk about lowering interest rates to unseize certain parts of the economy, but keep the interest rates firm. If they pivot, if the reaction in the U.S. economy to the rises that we've seen gets worse, in other words, if the pain from the punch last year is delayed, then they will lower interest rates. And if they lower interest rates, I remember in 1976 that Fed pivot, and that Fed pivot kicked off the damnedest gold rally of my career.
Wow.
I'm not saying it's going to happen, but one of the only good thing probably about being 70 years old is that while history doesn't repeat, it often rhymes. And I remember that circumstance, believe me, like it was yesterday. And I remember it with a certain fondness. And if we saw a substantial Fed pivot, Gold would be off to the races. What other comment, macro comment, Carrie? And I'm no economist. I'm a credit analyst. I'm a used money salesman. But if we had a circumstance, particularly in the U.S., where we had a liquidity crisis, if there was a black swan, a 2008 style event, and I could think of 2 or 3 black swans that might cause it, then the Fed would certainly step in with quantitative measures like they have before.
Okay.
I'm not saying we're going to have a black swan, by the way, but if we did, it would really truly be off to the races. And when I look at the horizon, again, not as an economist, but rather as a credit analyst, I see one potential culprit. And that culprit is U.S. corporate junk debt.
Oh.
People, when I say people, corporations have been borrowing on very generous credit terms for 40 years now.
Yeah.
And these junk bonds are frequently bought by high yield ETFs. The ETFs are owned by retail investors who haven't done any securities analysis. We call them inelegantly yield whores. And while the underlying ETFs are extremely liquid, the assets that they hold are very illiquid. And if you had a situation where there began to be credit concerns in the United States, and there should be, and you began to have disintermediation, which is to say, if retail investors began to sell the highly liquid ETFs, the ETF manager would have to sell the underlying illiquid bonds. There was a saying when Drexel Burnham came apart, the last time the junk bond market came apart.
Yes.
They had this phrase called an owl bond. An owl bond is when the customer calls the broker and says sell, and the broker says, "Woo-hoo!" So if I looked at something at the landscape that scares me, it's credit concern in the junk bond market and a run on the banks. By the banks, I mean the ETFs, which hold $2 or $3 trillion worth of junk bonds,
really,
that are completely illiquid. Wow. These ETFs trade like water, and some of the underlying junk that they hold trades every 6 weeks. They're over-the-counter bonds. And I'm not saying this is going to happen. Believe me, I have no idea it's going to happen. But I've been pounding my brain trying to think about what could go wrong with various theses that I have. And what could go wrong would be a credit circumstance like 2008. And when I think about what could precipitate that, other than, say, a broader war, the one that comes most easily to mind is the structure of the junk bond market.
Okay.
And I will admit that scares me.
I hear what you're saying, and it's interesting because I'm going to start to have a look into all this, but I also look at it and think the structure of the junk bond market can still be, I guess, not manipulated, that's probably the wrong word, but people can keep it going for a lot longer.
Well, we certainly were able to recover after the 2008 real estate securities collapse. It's important to note, though, that the Fed did that in a circumstance where aggregate on-balance sheet federal government liabilities were 30% of GDP. They're now 110% of GDP. One wonders how much string is left to push. I'm not saying that there isn't enough faith in the U.S. Fed and in the U.S. economy that they couldn't save it again. I actually think they could, but I think the damage that would be done in the interim would be substantial. And I think that the damage that would be done to the psyche of investors like your listeners while they work that out would be massive. In my own portfolios, I've told you before, I have a lot of cash. And I have that despite the fact that the interest I get paid on my cash is, I believe, less than the real rate of inflation. In other words, I'm losing money on my cash.
Yeah, you've said that before. Yeah.
I'm doing that because I regard that negative interest as a premium, as an option premium on having the cash to take advantage of a circumstance where an illiquidity squeeze happened. I hope when I hit whatever age I am, that I become reflective and not aggressive. When I'm looking back at things, I think that my caution with regards to cash and my caution with regards to gold was ill-founded. I hope nothing goes wrong. I hope that
Yeah,
my
same.
defensive investments turn out to be mistakes.
Yep.
But Carrie, I got to tell you, I sleep better for having made them.
So cash at the moment for you?
Absolutely.
Wow.
That isn't the only thing. I've been around a long time. I've worked hard. I got lucky. I saved. I have a reasonable sized portfolio.
Sure.
So, and it's beginning to look really like a barbell.
Like a what?
There's some barbell. There's some very low risk investments like bullion, cash, senior companies like Exxon.
Oh,
Then in the middle, there's not much. And then I'm buying all these penny dreadfuls over here. So it's low
so
risk.
so so
Low,
so exploration is out of favor. Rick
yeah,
Rule is jumping back into the exploration
yeah,
market.
low risk, no risk, and high risk.
Okay. Okay. You just mentioned then that you love the bullion side of things as well. So bullion's still very much part of your portfolio.
Yeah, and that's probably stupid, Carrie. I'm probably stupid owning gold, as I say, because I'm a large Sprott shareholder. If gold does well, Sprott will do well. But gold helps me sleep nights. I consider it to be the ultimate form of cash. And at 70, it's rare that things help you sleep well. So I own gold and I own cash.
All right, Rick, a couple of things. If people, and I know we've mentioned this before, but if people want to reach out and have their portfolio looked over by your good self, they can go to ruleinvestmentmedia.com. I think it's called Rankings.
Yeah, go to ruleinvestmentmedia.com. We have a rankings database, which is updated continually. List your natural resource stocks. I'll rank them 1 to 10 if I know them. And I'll comment on individual issues if I think that my comments might have value. While you're at the rankings database, if you care about Battle Bank, Right Bank, and by the way, I have a different site, which is called Rule Classroom. There
Yes.
are 5,000 members at the Rule Classroom. At
Yeah.
the Rule Classroom, you'll find over 200 hours of instructional videos. It's all free. There are thus far 9 segments of what will be a 60-segment course on natural resource investing, all free.
Fantastic.
So if you want to begin to rank your own portfolio, go to the Rule Classroom, peruse it, join if you want the live question and answer conference calls with myself at the Rule Classroom. We about once a month have a company on which we interview, and we have an upcoming feature, Carrie, that I think will crack you up. I hope you come for that. The Rule Classroom is going to begin to do Shark Tank, where
Oh, that'd be
invite the
good.
C where we invite the CEO of a company who tells us that his company is selling for less than half what it's worth.
Mhm.
We give him 15 minutes to give us the presentation. Then he is grilled for 45 minutes by myself using the techniques that we teach people in the Rule Classroom. We let the CEO review the Rule Classroom so he has some sense of the questions that are being asked. We're not trying to ambush him or her. And then for the last hour, we let the students in the Rule Classroom participate in a live question and answer session. I tell the CEOs that if they actually think they're undervalued, that we'll put them in front of several thousand educated high net worth investors, and they can build a constituency in only 2 hours that will go a substantial way to solving their undervaluation problem. If, however,
It can go the
they
other
aren't as
way.
if they aren't as virtuous as they believe, they probably won't be able to raise money in the US market for the rest of their natural life. My suspicion is that this will generate a very, very, very competent crop of people who take us up on that. So if your people are interested in that, go to the Rule Classroom, sign up, and we're going to start doing Shark Tanks.
I love it. What a great idea. You know what, Rick? Maybe we'll do a Shark Tank at the Gold Conference this year. That'd be a bit of fun.
Absolutely. You got to find how do I say this politely? You got to find somebody with stones. If we do Shark Tank, it's not going to be a puff piece. It's
No,
not
no,
going to be
no, no.
advertised.
It's much better not to do a puff piece because who cares?
I'm not setting anybody up to fail,
Mhm.
but they better come prepared. If somebody tells me that they're selling at half value,
What
we're
are your
going to make
numbers?
them we're going to make them substantiate that.
Rick, that sounds like a lot of fun. So that is Rule Classroom. Go check that out as well, ladies and gentlemen. And Rick, before we finish up, what I want to know is this. If you were to give 3 pieces of commentary, I don't like necessarily to call it advice, but what 3 things would you say to people that they should be doing right now? Look, I'm talking to you as I cannot believe it. We're almost at the end of January, coming into February of 2024. There's a lot going on this year, but what 3 things would you tell people they should be doing?
If you're a natural resource investor, well, any kind of investor, the first thing is work.
Do the work.
Most investors take the headline from ABC, which is invariably wrong,
Yeah.
and they use it to shape their narrative. So do the work yourself.
Yeah.
And the work doesn't just mean, although it does mean listen to Carrie Stevenson, it just doesn't mean just listen to Carrie Stevenson. Read the quarterlies, read the filing statements, read the documentation around the companies that you own. Do the work. The second thing is be a contrarian.
Yeah.
Uranium at $20 a pound had no love, but the price had to go up or the lights would go out. Those were the 2 choices.
Yeah.
Figure out, is the price going to go up or is Western civilization going to end? Those were the 2 choices.
Yep.
It was pretty silly 2 choices. So be a contrarian. The third thing is be patient and tenacious. The truth is that these stocks can rise or fall 15% for no reason whatsoever, other than an institution is buying or an institution is selling. Learn to make volatility your friend. Buffett famously said, you shouldn't buy 1 share of a stock if you wouldn't be delighted to see it fall in price 30% the month after you bought it. Yeah. So you could employ more physical capital behind the same intellectual capital. Sadly, Carrie, I've been tested with that thesis dozens of times in my career. But it's important that you be patient. Yeah. In my career, the money has been made in 10 baggers or better. I mean, it's fun to make a 30% gain, but it doesn't matter. What matters is the 10 baggers, the 15 baggers, the 20 baggers, particularly the 15 baggers with a full warrant. And that requires time. You answer a series of unanswered questions. The average 10 bagger or better in my career has required 5 years. Most investors have trauma holding stock over a long weekend. So you need to have the courage of your convictions. Yeah. And most 10 baggers in my portfolio have delivered a 50% share price decline during at some point in time during the time I owned them. Paladin, my biggest all-time win, delivered me a 90% decline. So I think you need to be persistent and tenacious. So those would be the 3 pieces of advice I have.
Well, I think they're very good. Got to have the guts to hold on when everything around you is falling apart. Because if you believe in the story, nothing's changed. The price might have dropped.
I mean, the truth is, Carrie, right now, I hope the gold stocks go lower. I hope they go materially lower, because I would like to add a substantial number of them to my portfolio. And I would prefer to pay less rather than more. Yes, I have a portfolio of gold stocks. And yes, those gold stocks would go lower in price. But the truth is that I'm looking to up my allocation substantially. And I would prefer to buy it cheaper rather than dearer.
Well, let's hope that come August, just a reminder, ladies and gentlemen, the Australian Gold Conference will be happening between the 26th to the 28th of August at Crown in Sydney. Go to goldevents.com.au, where you will find that registration, the early bird, is open right now. We will have some surprises this year for you. I may be looking at one of them right now, but I've still got to do a little bit of work there. But he loves his Aussie club, and as we said before as well, the Rule Investment Conference is happening in Boca Raton, Florida, and it's a lot of fun. It's hot, but it's a lot of fun, and I know for a fact because I've been there. You know what? Rick walks those corridors, but he also talks to us as investors all day, every day. He doesn't stop. So I would prefer you all to come over and be there in person, because that's the sort of information that you don't get from watching something on a screen. Rick Rule.
Thank you, Carrie. Been a delight.
Absolutely.
Let's do it again.
Yeah, absolutely. Let's do it again. We'll go back and do that uranium thesis very soon. Give some more information to people about that. But in the meantime, ladies and gentlemen, don't forget to hit the like and the subscribe button. Share this with everybody, because that was a lot of great information for all of you investors out there. But for now, Rick Rule from Rule Investment Media, thanks so much for joining me on Making Money Matter.
Thank you, Carrie.